Hello, investors. This is Ted Zhang, Portfolio Manager at Revere Asset Management. Today is Friday, April 4th, 4:53 p.m. coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Stay in the market. Harsh correction now from moderate correction since the S&P now is down, I believe, about 12 to 13% year to date. Nasdaq down about 16 to 17%. And really no market leaders at all. We have a four down arrows, market leaders nearly non-existent, short term below 21, medium term below the 50 major indexes, and long term, all major indexes below the 200-day moving average as well. 21 list under construction. There's a scarce number of stocks that we can put on there, so we are not including that in the market breakdown. Big 8 down 5.99%, RG8 down 5.9%, S&P 500 down 5.97%, RSP down 5.61%, Qs down 6.21%, QQEW down 6.49%, Dow Jones down 5.5%, midcaps down 4.83%, Russell small caps down 4.37%, Global 60/40 equity bonds down 3.6%. And GROTECTION down 0.05%. And sorry, this should be highlighted in orange. You can see we are flat once again while the markets continue to see tremendous carnage. Yesterday we were flat as well with turbo green. And this is what we do at Revere. This is every day we do these videos and every podcast when we preach downside protection and having sell rules. This is playing out in real time. And those of you who have stayed with us and are currently clients are feeling it in real time. As many of you have texted us or emailed us so far, you guys are able to sleep at night, and that puts a big smile on all of our faces. This is precisely why we do what we do at Revere, and we're happy to be serving everyone that is with us. So, as always, starting off with the S&P 500 chart. There's not going to be too much to really talk about today. I'll quickly go over some economic data, some price action, but it's really just more carnage. As you can see, yesterday gap down after the tariff news. Today another gap down following tariff news as markets start pricing in implications of the tariffs if they are sustained. And we will see what happens, whether Trump gets what he wants in negotiations, whether he lifts the tariffs, reduces the tariffs. Is still uncertain. That's why the markets are extremely weak. We end up closing below this August Yang carry trade mini crash low on massive volume. And this really sets us up for a potential third day gap down. If we do get a day three gap down, that would make the S&P extremely stretched to the downside, and mean reversion is very possible. Let's look at S&P here. We're currently down 10 basis points after hours, so nothing much. We have the 500 level approaching as well as this 493 low. If we go on a weekly chart, let me bring up the S&P 500 chart. This is really big support as well, the previous 2021 highs. And oftentimes you'll find that longer price cycles, longer market cycles will retest previous peaks, like how 2022 nearly retested the pre-COVID highs as well before going on this new bull market. So we're currently trading at 50.74. That would go down to 48.18, which is that 2021 previous high. But this volume is escalating. It's the highest weekly volume in this entire sell-off so far. Perhaps we get some capitulation next Monday and a short-term low, or we bounce next Monday, bear flag, and then continue further. But this is a completely broken chart, and we've stepped aside, and there's really nothing to do here. Let's go over the other ones. RSP down 5.61, huge volume, carnage. Qs day two down as well. After hours down 10 basis points. Same thing. We closed below the August low, and then we're really looking at the 2021 highs, which was about 408. So we're almost right there within 14 points here. And this 400 to 408 level could potentially be a nice a reasonable place to land for this fear. So you can see volume has elevated significantly as well. On the daily, this is the largest downside volume in this whole move after two gaps down. So we're definitely getting more to a potential short-term tradable low, or at least a mean reversion low into the key shorter-term key moving averages. The risk reward here on the short side is not there definitely anymore. Equal weighted QQEW, same thing, two gaps down 6.5% today. Dow Jones, same thing, down 2,200 points today. Yesterday, down 1,700 points. This is just some total carnage and a spectacle, to say the least. And again, we've been able to sidestep this crash because of the disciplined rules we implement at Revere Asset Management. And that is why our clients pay us to do what we do. Mid caps, same thing, down 4.83% today. Broke down from this bear flag and then continued carnage. Small caps, Russell, same thing. Day two down, day two gap down post tariff carnage. The VIX, which is the volatility index, this is not the correct figure. Let me go to Trading View. The VIX is closed at the highs of at 45 and 31, up 51% today. So fear is definitely coming in the markets. The VIX hit 65 on the yen carry trade fear, so we're still not even there quite yet, but we're starting to see some capitulation action volume on the various indexes and stocks. Bitcoin, though, is an absolute standout and something I am stalking very carefully. Why do I say that? Well, we're hovering around the 200-day moving average on the weekly chart. We're still trading above a rising 40 week and even just right at the rising 30 week. We didn't even break this previous base highs yet. This is just completely normal base so far, and this is something special happening from Bitcoin, and we'll continue to monitor this closely because this looks like it will be a definite leader if when the markets do resolve themselves to the upside. Just remember this Bitcoin chart, you can see we're above the rising 10, 20, 30, 40 week moving averages, the red, green, magenta, and white lines, all rising. We do have the 10-20 bearish cross, but the 30, 40 are completely rising. And now look at the comparison to the S&P weekly. Look at that, below all weekly key moving averages, well below, and they're bearish and aligning. Let's look at the Nasdaq 100, same thing, below all key moving averages. Mid caps, same thing, below all key moving averages and aligned to the bear side. Small caps, below all key moving averages as well. Mega caps, Mag 7, same thing. Back to that 40-ish price target that I talked about on my Twitter account as well. There's some real carnage done in the markets and in stocks the last 2 days. And without sell rules, that will cause a lot of pain and sleepless nights. In bonds and fixed income, yields slid today, but rallied actually into the close. Let me bring up the daily. The 10-year yield made lows of 3.86%, which is exactly what Scott Bessent and Trump want. Problem is we rallied back above 4%. So this makes me think potentially Trump's going to, they want more chaos in the markets and more carnage to really force people and liquidity to enter the US Treasuries to push yields lower. Why do I say that? There's many threads on X describing it really well, but my take, and this is why I've been short and bearish the last month and a half, because Scott Bessent made it clear that they're trying to drive liquidity to US Treasuries to lower interest rates. This also, in a way, forces the Fed to cut interest rates as well. This allows the US government to refinance our debt, which about 7 trillion is coming due soon. And this will save the US government hundreds of billions of dollars and a lot of stress on our fiscal situation. This frees up capital. This stimulates the economy at the same time. The Fed lowers rates, that also stimulates the economy. And really, I believe this is one of their main plans. Of course, with tariffs, Bessent believes part of the other plans is to bring back manufacturing to the United States. It also forces farmers to sell their own products to Americans. And of course, tariffs also generate some revenues for the government as well. And Lutnick talked about how his vision was to transition this economy from maybe from an income-based tax model to a consumption-based. And whether or not all of this works out, we will not know right now. It's a nuanced debate. There are a lot of opinions and comments from various thought leaders, whether opposing this agenda or for this agenda, and no one knows how this is all going to play out. And we will have to only judge in hindsight, maybe 12, 16, 24 months. So we'll see what happens with the Trump tariffs. The negotiations have started, for example, with Argentina and Vietnam looking to lower their tariffs. And I believe Trump thinks that using tariffs can help him negotiate worldwide tariffs lower, and that will free up trade for everybody. So that's it with the inter-asset correlation and some tariff commentary on how I interpret what the administration and Scott Bessent, our Treasury Secretary, has been talking about. And with that being said, move back to the charts and Market Smith. There's really no 21 over 21 list as I talked about. We talked about the Bitcoin relative strength, which we are looking at closely. In TurboTaxer today, we ended up covering the rest of FNGD, which is the short, pretty much mega caps. We just believe that after 2 days down, some huge volume coming into potential support, we're willing to take it down and head into the weekend with a clear mind to evaluate the markets as we are starting to see capitulatory action. Stocks, same thing, huge, another day two gap, and really we are back to almost the cup with handle breakout from May 19th, 2021. So we thought with leverage ETFs, if we do get a rally next week, the leverage in these inverse ETFs will get crushed, and we're just happy to take the profits there. Now, I'll just finish this video off by going over the Mag 7 stocks. And this is another thing I talked about on my X account and the daily videos for quite some time. Because of the excessive concentration of Mag 7 and S&P 500 and the Nasdaq, it hit almost upwards of 40%. It left the indexes extremely vulnerable to this type of market slide, correction, and even crash when most of the index is concentrated in a few names with historically high valuations, euphoric sentiment around them, and in bubbly territory. And the trigger, the catalyst for the uncertainty around Trump's economic policies, and now these extremely, extremely high levels of tariffs. So first off, Apple, literally 225 all the way down to 187. I'm going to actually show you deep view and go over the mega caps on deep view. Just want to show off some more tools that we use here at Revere. We'll start off with Apple. From the highs, we're down 28% in 2 days, down 17% for over $3 trillion business is unreal move to the downside. Amazon into stage 4 as well, off 31%. Avgo, another semiconductor name, off 45%. Google, off the highest filled breakout, off 30% in the downtrend as well, below the key moving averages. Meta, off the highs, 33%. Microsoft off the highs, 23%. NVIDIA now is trading 39% off the highs. And we potentially will have some support here at 90. We're below 100 or below that 104. This is in a downtrend, and this can really give back a lot of the move. You can see this is looking like it's falling off a cliff. 90 is really the last level support before we test 75. If that breaks, I can see a $50 handle come on NVIDIA, and that would most definitely drag the S&P and the Nasdaq down. I believe NVIDIA contributed to like 1/4 of the total 2024 gains, which is insane concentration in these stock indices. Tesla continues a downtrend, down 10.5% today. This has given up a huge part of its move already down 52%. Maybe we test the lows down here. We will just have to see. That's about 71% decline. So that is the mega cap stocks, Mag 7, plus a few others. And when you look at these names, even though they're currently a little bit stressed to the downside, there is a lot more room to the downside, but that doesn't mean we go vertically straight down. We can rally, form new bear flags, form new setups, and they might present more short setups coming up in the future. So we're keeping our minds open to the long and short side. There's really nothing to do on long side, maybe except for a mean reversion try. If we do gap down next Monday, which would stretch us even further, and eventually the rubber band does snap back. So that is a potential uh, decent risk reward opportunity. Other than that, our mentality is sit in cash, sit in money markets. We're definitely defensive as we have been, and yeah, we're just fulfilling our dual mandate, which is protect during downtrends. And eventually, when we do head back into the uptrend, when the market leaders and groups are back and strong and showing us signals, we will participate again and fulfill the other side of the dual mandate, which is grow during uptrends. So, with that being said, it has been a tough week. There's a lot of fear out there in the media, even other people in newsletters, your friends, your family. People think it's the end of the world. People think there's no return, that the markets are going to go down forever. And that is precisely when markets start bottoming out. That's just how human psychology and these cycles play out over and over again. When the pendulum swings to an extreme, that is when you want to start putting on your contrarian hat and start looking the opposite direction. That doesn't mean the pendulum can't swing further to the extreme, but you just have to be aware of where the pendulum is and just know when everyone has a consensus of one thing, it's often wrong. And you must consider the opposite side of the trade. So pretty much it's always about being skeptical, not pessimistic, but skeptical. And what that means is considering the optimistic side when everyone's pessimistic and considering the pessimistic side when everyone's optimistic. And that is how you operate as a proper contrarian in the markets. Of course, there are times where you want to be a trend follower as well, which we've noted, and that is when we ride stocks, whether to the upside or short stocks to the downside and ride those winners. So with that being said, I'm going to end this video for this week. We fulfilled our dual mandate in GROTECTION and ROBOTECTION, as you can see on the screen here, flat when the markets saw carnage, and we will participate in the uptrend when the stocks and the markets tell us to do so. So hope you enjoyed this video, and this is exactly why we do what we do at Revere. We have sell rules, protect the downside, and the pie chart asset allocators are just holding on for dear life, and they're going to have to end up explaining to their clients why they lost 10% of their Nasdaq in 2 days, why there wasn't sell rules or downside protection. So with that being said, I'm going to wrap it up for today's video, Friday, April 4th. You can email me at ted@revereasset.com or follow the Twitter or X at Ted H. Zhang. Our phone is 855 Real Wealth. That is 855-732-5932. Our website is revereasset.com and our YouTube is Revere Asset. That being said, if you're interested in becoming a client or interested in what we do free portfolio reviews. You just reach out. And with that being said, this is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening and have a great rest of your weekend.